How's your year been? It's nearly the end of 2025, so here are 5 of the most important lessons I've learned this year as a 6-figure funded forex trader. Each lesson I'm going to share with you is from my own experience this year, and hopefully you can learn from these lessons to make 2026 the year you finally become profitable. Even if you're watching this in the future, you can still benefit from the lessons I'm going to be sharing with you in this video. And so if you're wondering, who am I? My name is Lawrence. I've been trading for over 5 years. I'm a funded forex trader, and I also run an online trading education business with its core mission of helping over 100 traders, forex traders, become profitable, get funded, and make their first payout by 2027. So I've got a few notes here that I'm going to be going through. There's 5 lessons that I wanted to share with you in this video. And starting with lesson number 1. Lesson number 1 is trusting the trend. So reflecting on my year, as I do my reviewing, analysing my performance, going through my trade journal and trying to understand what I can improve on, what I've been doing well, one of the themes that have come up when I've done this reviewing is that the majority of my losing streaks, the majority of the months where I haven't made as much money or months where I've actually lost money what I've noticed during these months and during these periods is that I've been fighting the higher time frame trend. And then on the other side of that, my most profitable months, the months where I've made money, the months where I've made a good return, the months where I've been performing well in the markets, have been when the markets are clearly trending and I'm following it. And so that's lesson number 1 from my trading in 2025, to trust the trend, to not fight it. Because as I've just said there, the majority of my losing streaks and months where I've underperformed have come from when I'm fighting the trend and failing to trust it and not following it. So what that looks like for me is the 4-hour time frame could be pulling back, okay? And although the 4-hour time frame is bullish, right now it's creating a bearish pullback, but that bearish pullback is lower quality. And so I'm trying to trade that counter pullback. However, that's a lower quality setup, and I end up taking lower quality trades because of that. Moving on to lesson number 2, not trading. And so no matter how much money I make, no matter how many payouts I make with each year that I'm trading, every year I'm reminded of the importance of this lesson that I'm about to share with you. So as well as fighting the trend, as I went through in lesson number 1, so learning to trust the trend, failing to sit out of the markets and not trading until the markets and the market conditions are clearly aligned with my setups is another reason behind months where I've underperformed and potentially put myself into a losing streak. So not trading is one of the most profitable things you can do as a forex trader. Of course, once you've got your edge, you understand what setups you're looking for, you know what trades you need to be waiting for. Once you understand that, and by the way, if you don't have a profitable strategy, you can learn my entire supply and demand strategy completely for free by clicking the link in the description. But lesson number 2 is all about not trading. And months where I've underperformed, months where I haven't done so well, or times where I've entered into a losing period, has also come down to not being patient enough. And again, I learn this every single year. This is always something I'm being reminded of, and you can probably relate to, of just sitting out, being more patient. As forex traders, we can always be more patient, and that's an important lesson. Lesson number 2, not trading from the year of 2025. So the months where I trade the least are also the months where I make the most money. So to give you an example, in November, I only took 4 trades, and November was one of my most profitable months. And that's not a coincidence. I traded the least, I waited for the highest quality setups, and although I didn't technically do much, November was a month where I made a lot of money. I did well, I made a good return, but I only took 4 trades. And that's a lesson number 2, not trading, that I took from 2025. Moving on to lesson 3, staying focused on the charts. So this year, I've traveled to over 6 different countries, which has been amazing. Been to Romania, Budapest, Crete, all these beautiful different countries. However, during each time that I have been away, it's caused me to be distracted from the charts. rightly so, because I'm enjoying the country that I'm in, I'm going out, I'm eating food, I'm spending time with my wife. So what this has caused me to do is miss trades because I haven't been focused on the charts. However, I was not prepared. And this is a lesson, because I wasn't prepared, sorry. And this is lesson number 3, staying focused on the charts, that I learned from 2025, my trading in 2025, that you need to be more focused. I need to be more prepared and focused. And there will be times in my trading where if I'm not focused, if I am distracted, if I'm not preparing to trade, I'm not doing my preparation, mentally warming up, then I'm going to miss setups. I'm going to leave money on the table. And so I perform at my best and I make the most money. I take the best trades, I perform the best in the markets when I prepare and I'm focused on the charts, like I've just said there. And so you can't check the charts every so often and hope to take a trade. So you can't just open up TradingView on your phone every hour, let's say, and expect to be a profitable trader, okay? You need to know when to be at the charts and prepare for what you want to see happen in order to take a trade. And this is tying into lesson number 3, which is what I mentioned there, staying focused on the charts. The times where I'm distracted, I'm not doing my preparation, I'm focused on other things, I've left money on the table, I haven't performed as well. And in order to go into 2026 performing at the best of my ability, I need to understand that when I am distracted, if I'm not doing my preparation, if other things are occupying my time, then I am going to miss money on the table, and I need to be prepared for that. And of course, as forex traders, you're not going to take all the setups. You are going to miss trades, and if I'm on the plane, if I'm on a flight, of course I'm not going to be able to necessarily take setups. Moving on to lesson number 4, higher time frames are better than the lower time frames. So this year, if you've been following my trading, I made the shift from using the 15-minute time frame to take my entries to now using the 4-hour time frame for my entries, okay? The strategy is still the same, so I trade the exact same way. It's still a supply and demand trend strategy. However, I've stopped using the 15-minute time frame for my entry model, and I now use the 4-hour time frame for my entry model. And the entry model is the exact same. The rules, the process is the exact same. Everything is the same in my strategy. However, I now use the 4-hour time frame to take my entries instead of the 15-minute. And this was one of the best things that I have done this year for my trading, okay? And I'm not saying that the lower time frames aren't tradable. Of course, you can be profitable with trading the lower time frames. I got one of my first funded accounts trading using the 15-minute time frame for my entry model. However, I wanted to make the shift to trading the 4-hour time frame for a few reasons I'm going to go through. But the higher time frames, for me personally, they're just so much easier to trade. They're more reliable, it's less stressful. I know when I need to be checking the charts more predictably. So after every 4-hour candle close, I know that I need to be looking at the charts. It's slightly slower paced. I have reduced my risk to reward. I was trading a 1 to 3. Now I trade a 1 to 2.25 risk to reward. But for me, it fits my style, okay? I've got a lot more going on in my life, and switching to the 4-hour time frame has given me more time. I don't have to actively sit at the charts and wait for an entry to present itself on the 15-minute, because what could happen with the 4-hour is there could be an entry that gets created while I'm sleeping. And if I wake up and just check the charts, do my preparation, my morning routine, all of that stuff, then I have plenty of time to think properly, analyze the setup, and make a high quality decision to decide whether that setup is valid and I want to take it. So it's just slower pace. But my strategy is completely the same. So switching to the higher time frames for my entries, as I've said to you, has allowed me to spend less time at the charts, increase my win rate, because like I said there, my decision making has been slowed down. So I'm able to avoid trades that maybe I would have taken on the 15-minute because it's slightly faster paced. So the 4-hour has allowed me to just make better quality decisions, which as a result has actually increased my win rate because I'm also taking less trades and less impulsive trades. So it's something to think about if you're trading the lower time frames, to maybe switch to the higher time frames. And again, you can learn my entire strategy completely for free by just clicking the link in the description. So it's also reduced the mistakes I'm making, like I've said, and minimizes the amount of stress while I'm trading, which we got into trading to make money, we got into trading for freedom. I didn't get into trading to be more stressed. And so the 4 hour has allowed me to just slow things down, make better quality decisions, and it's actually increased my win rate and has allowed me to be actually more profitable. So moving on to the last lesson here, lesson number 5, the importance of creating a journaling routine. So ever since I've learned about journaling, or ever since I got into trading, and I first started trading, I have been journaling, but it was never intentional or consistent. So I got introduced to journaling very soon, or early on into my trading career back in the end of 2019. And it was never consistent. I never had a structure to it. There was no sort of process and consistency and persistence to my journaling. I knew it was important, but I never really took it seriously. And so during this year, 2025, I made the effort of reviewing my performance. So I created a schedule of reviewing my performance every single Friday. And this has a huge impact on my results because, as well as journaling my trades, so I have a method for journaling my trade. If you check out one of my videos, my last video, you would see that I shared my 6-part journaling system. So I have a method for actually journaling the actual trades I'm taking. Okay, but I also have a system for journaling just my thoughts and my performance and what I need to improve on. And so I will sit down every Friday at market close, or if just in the evening, UK time for me, I will sit down and I will review my performance. And there's a few things, a few questions that I go through. And what I've done here is I've made it a consistent habit. Throughout this year, I've made the effort to make it a consistent habit to go through the same questions to review my performance every single Friday evening. And the impact it has had on my trading, on my psychology, on my improvement, on my progression has been amazing. And this is a lesson I wanted to share with you because maybe you're journaling now, maybe you're not, but I'm telling you, or I'd like to share with you my experience by creating this habit every Friday, sitting down, journaling my performance. It has honestly improved my performance in the markets. It's made me sharper, it's reduced the amount of mistakes I'm making, and it's highlighted to me what I need to improve on going forward. So, like I said there, as well as journaling my trades, I will write down 3 things. What I did well, I'll write that down. What did I do this well in the past week? So I journal each week, Monday to Friday. I'll also then write down what I didn't do well. So what did I mess up? What mistakes did I make? Is there anything that, well, yeah, any mistakes that I've made from Monday to Friday? I'm doing this weekly, every Friday. And then the last thing I will write down is what do I need to improve on going into the next week? And that question, just by answering that question and reflecting on that question every single Friday, what do I need to improve on going into next week, has just allowed me to, like I've said, improve my performance, stay on top of my game, and reduce the amount of mistakes that I'm making in my trading. And so creating this routine has allowed me to stay on top of my game, as I've just said, and identify quickly when I'm making any mistakes, which is important. Even though I'm funded, even though I'm a profitable trader, I still make mistakes. There's still times in my trading where I mess up, I underperform. And by having this consistent routine, this journaling routine every single Friday, and identifying what I'm doing well, what I'm not doing well, and what I need to improve on going forward, it's just helping me to minimize my mistakes. It's keeping me, like I've said, on top of my performance and understanding if there's any mistakes I'm making that I want to quickly eliminate so that I can go into the next trading week better, sharper, and ready to be on top of my game. Those are the 5 lessons. I hope this video has helped. I hope you have had a great year and an even better 2026. And if you're watching in the future, I hope these lessons have helped you and you can implement them to benefit your trading. Thank you very much for watching, and I'll see you in the next one.